in every class. It's a quick checklist of things to do if something's going wrong with WebEx. So if you can't hear us, make sure your browser has pop-ups enabled and always allows pop-ups. Select that you accept pop-ups from WebEx. Make sure your volume is up. Do a speaker mic test by clicking the audio at the top of the screen. If that fails, sign out and then sign back in. If that fails, do a full shutdown of the computer and then turn it back on, and don't restart. And of course, click yes when WebEx prompts you with your presenter has started an integrated voice conference. And again, for those of us just joining us, you are automatically muted when you join the class. Because these classes are so large, we use the chat function to interact with everybody. But in general, don't be shy about asking questions. And to those of you listening to this presentation online who've downloaded it from ULearn, welcome. This is our first session of Fundamentals of Income Tax, Fundamentals of Income Tax. This is our level 1 course. This is part 1 of the course for 2025. Right, I'm just going to move the participants window down here out of the way, and the questions window down here, so it's out of the way. So I'll try to keep an eye on that as we go, but Ali Reza, if there's an urgent question you think I should be answering, do just speak out and get my attention. So welcome everyone across the internet. Here is my colleague, this red-headed lady who I'm not sure which office she works in, but she will be a familiar face as we move through the course. Before we get into things, we will begin with land acknowledgement. So what you may not be aware of is that H&R Block Canada, its headquarters are in Calgary. So in the spirit of reconciliation, we acknowledge that CSC is located on the traditional territories of the Blackfoot Confederacy, the Siksika, Kainai, the Piikani, the Tsuut'ina, the Yaq'ke Nakota Nations, the Métis Nation, Region 3, and all people who make their homes in the Treaty 7 region of southern Alberta. I am located in Vancouver, and in our district, get back here. In our district, we work, live, and play on the traditional and unceded territory of the Musqueam, Squamish, and Tsleil-Waututh First Nations here. My name, as I mentioned a little earlier, is Brian Clark. This is my 17th year with H&R Block, and I'm what they call a senior tax professional. My specialty is residency and returns for new Canadians. I've been an instructor of various sorts since 1999, and I am, for many years now, I've been an adult business educator. I've been a writer and proofreader for Tax Academy for the last few years, so I am, in fact, one of the authors of the textbook. I'm not the lead author. If you were to look at the title page, the lead author is Eddie Hernando, and my name would be, further down the page, spacebar, 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 little print at the bottom of the page. That's where you'd find me, but I am one of the contributors to this course, so I'm quite familiar with the material. Before coming to work for H&R Block, I was a tax researcher working in payroll with Microsoft Dynamics AX, and as part of that, I researched the various tax systems across North America. So even compared to the average H&R Block tax specialist, I have a fairly broad understanding of tax theory and records management in general. So I can, in practice, I can answer a lot of the why questions about taxes in great detail. Although I will try very hard to avoid boring you with too much dry history or anything like that. You all should have received an email from me with the course schedule and your learner guide. It's brian.clark@hrblock.ca. For anyone who is listening to this on the web, you can email me a question, but bear in mind that I am not your assigned instructor, so all I can do is pass along feedback in a general way. I in particular cannot make your instructor do anything. Requests have to go to the instructor in general. But I'm always happy, as part of my mandate, to answer general questions, particularly about the material. My moderator tonight, Alireza Bazeli. Alireza is in his 5th year with us. He's a level 3 tax professional, and he also works on residency. His main job is to keep track of the attendance. Every session, he records who is here and then sends me that information later on. And if you miss a class, he will send you an email to remind you about the class. This also means that if you are going to miss a class, you can email me or Alireza and let us know that you're not going to be here. And if, for example, you're about to go on vacation or something like that, then get in touch and let us know, and we can make arrangements. So in the class, because I have a background in education, I have some very strong opinions about this, that a class is a place for an exchange of knowledge. So this is a place to ask questions and have fruitful discussions of topics. And I don't feel particularly constrained just to recite what is in the textbook. That said, the discussion should always be respectful, and if there are disagreements, those should always be respectful. Now, this might seem silly because this is an adult class and we are all adults here, but bear in mind that this class is being taught across the country. There are something like 25 different sessions of this class going on. So, it's possible some class somewhere there might be a need to spell out this policy. So obviously, adult education principles, no swearing, no abuse, no bullying, anything like that. The key point for me I want to stress is that we're always going to respect class times. So the course starts at 6 and ends at 9. That said, I'm usually not going to dive straight into heavy lecture stuff in the first 2 or 3 minutes. So if you are running late, don't worry. The first few minutes of any given class are going to be of a general introductory nature. But if you are running late, don't panic. Similarly, if you need to leave at 9 p.m. sharp, that's perfectly fine. Generally, I will stop the class at or very close to 9. There's very little that is so important that it cannot be held over until the next class. And the only exception for that is if I'm right in the middle of a paragraph and if stopping might lead to some confusion. All right. Because this class is being recorded, we're going to make sure we cover all the material tonight. But based on yesterday, I don't think that should be too much of an issue. So in tonight's class session, we're going to begin by just walking through some of the course materials, getting to know each other a little bit before we start getting into the tax theory. So I do have some questions for you all, and this will give us a chance to test out the chat function. So first of all, in the chat window, feel free to type in. What I'd like to know is if anyone, is there anyone here from outside British Columbia? Are you all in British Columbia? I'm located in the Lower Mainland, but some of you might be in different parts of the province. Last year I had some students from Alberta who had to sit in sometimes. And because this class is being recorded, sometimes I have students from much further afield who happen to be listening to it. Last year I had a student from Seattle who was listening to this on the web. So Vancouver Island, Victoria, good. Squamish, very nice. Chilliwack, very good. Langley, oh, Kamloops, Lillooet, very nice. Comox. Yes, this is good. One of the advantages of the online class format is it does allow us to have students from a broader geographical area, and so with a lot of different perspectives sometimes. When it was in-person classes only, of course, it was only whoever could physically get to, say, Richmond or Vancouver or Burnaby for a given class, but this flexibility allows us to have students from further afield. Very nice. Very good. Right, well, it looks like most of you are from relatively close by or within the same time zone anyway. Yesterday I had several students from the Okanagan and one from the Kootenays. Kamloops looks like the furthest one away we have today. Good stuff, good stuff. All right, and just to give us some idea, what is, can you let us know in the chat, what is your background? Where do you work? Have you had, do you work with taxes? Do you work in a different field? I'm always interested to see what perspectives the students are going to bring to the class. So. Some of my students, a chemist, interesting. Oh, a CPA. Oh, I see. But this isn't your specialty. Yes. Education, the bank, previous experiences with taxes outside of Canada. Don't worry. I think you'll see we kind of begin at a fairly good place if you're coming from other experience. Or retired office manager and did payroll. Well, I think you'll like the tax, Lynn. Tax is kind of the mirror image of payroll. BC Public Service, good. Okay. So a wide variety of backgrounds. So some of you are going to be more familiar with some of the things we talk about than others. What I want to really encourage you to do, if we come into an area where your expertise can be of use, don't be shy about asking questions which draw on your past experience and your life experience, because this makes the class richer. There are going to be parts of the course where we talk about things like investments, where we talk about things like real estate in a basic sort of way, where we talk about things like education. So feel free to bring your life experience to the questions you bring into the class. And some of you have done taxes before, but just want to improve your skills. Well, that's great. The one thing I will ask is that if you work for a rival tax company, I don't want to know about it, because then we might have to ask you to leave, but otherwise everyone is welcome. Yes, but we are not in the business of training our competition. So, you know, be subtle about it. That is a joke, of course. But yes, in general, bring your past experience to the class. It makes everything richer, and it makes for a more rewarding experience for everybody. Now, let's continue our orientation by talking about the platform we use for our textbooks. Hands-on knowledge, absolutely. You are going to be getting a lot of experience working with the tax returns as we go, as you will see. Now, Inkling, let's talk a little bit about that. Inkling, for those of you who don't know, this is our textbook platform for electronic textbooks. That's what we're referring to here. And so just to make sure everyone is clear on it, now this information should also be in the learner guide that you've received, but just to make sure everyone is clear, Inkling is the platform, the software platform itself. This is the platform and environment that hosts our electronic textbooks. The individual textbooks are referred to as ink docs. That is a Inkling document. So if I'm talking about the textbook or the ink doc, those terms are interchangeable. In this course, we use one main textbook and 4 supplements. I'll show you those in a minute. And Inkling can be accessed either through a web browser or through the app. Let's give you a couple slides about the app. This might seem like basic information, but I have had students in the past who sat through 5 or 6 sessions of the course and then send me an email with something like, what is this ink doc you keep talking about? So I'd just like to make sure everyone understands the terms before we get into it. All right. Dean, don't worry, you're going to come away knowing a lot more. So the Inkling app you can find on Apple or Android, and all of the ink docs are going to be available. And within Inkling, you can bookmark the document, highlight the document, or add notes. And if there's no internet, you can download them and look at them online. Last year, it was a little difficult to print them because but that functionality got added relatively late in the course. As a practical matter, Inkling documents, if you were to print them out, most of them are several hundred pages long, so that's a lot to print out for people. The intention here with the app is particularly the idea is that you can use Inkling to pull up a copy of the textbook on a tablet or a second screen and have that handy to refer to as we're going through the material. As you'll see, if you have it all on one screen and you're jumping back and forth, it can be a little hard to do. So having that separate tablet can really be helpful. The company code you're going to use is HR block, so capital H, the rest small letters, and then you'll use the same username and password you're already using on the computer, and then just log in. And the first time you log in, it'll take a few minutes for your library to appear. Now, when I talk about a library, I mean this view here. So all of your Inkling textbooks, your ink docs are going to appear here. Because I'm an instructor and a writer, I see all of them. Yes, that's right, Ali Reza, the same email you used to register for this course. Right, so all of your textbooks are going to appear here because I'm a writer and I work for H&R Block. I have access to all 543 of them. You are not going to need all of them. The ones we use are listed in the user guide, which is right over here, the learner guide. So the Fundamentals of Income Tax ebook, the Tax Academy reference guide, the Facts and Figures guide, the provincial supplements, and then later the Block Pro for Tax Academy. The links in your learner guide here take you to the main page for Inkling. More about the learner guide in a minute. Just bear in mind you do have these lists of all the various resources we have are in your learner guide. Now, when you have the page here, it'll take you to this landing page. To find an individual textbook, you can just type in. So, for example, if I want to look at Fundamentals of Income Tax, I can just start typing it in here. So, Fundamentals, and then it comes up right here. And here's our textbook, Fundamentals of Income Tax. The textbook begins with an introductory section where it explains how the textbook works, how things work within it. There's various sections here, and then a lot of general information before we get into Chapter 1. In general, each session of the course, each day we get together, we are going to cover one chapter of the textbook. The chapters vary a little bit in length, so there's a few chapters where we need more than one session to cover them, and there is a couple chapters which are a little shorter, so we put two of them into one session. But in general, we will cover one chapter of the textbook in each session of the course. All right. Okay, Dean, if you're having some technical issues, hang on for now. We can look into those later. And there is a 1-800 number in your learner guide. Good point, Ali Reza. Sometimes it doesn't activate right away. But yes, if you look at your learner guide, which is right here, towards the end of the learner guide, so there's more information about Inkling, the virtual classroom in the learner guide, fillable forms package. I'll show you that in a moment. But yeah, it just kind of walks through everything you're going to need. But towards the end, I think, is here we are. Towards the end, there is a 1-800 number you can call if you're having, for example, trouble with ULearn. Where is it? Just hang on a second. Yeah, there you go. The 1-800 for the technical support team. So that's going to be more important later in the class when you're using software. So just remember, if you're having trouble with something, it doesn't hurt to have a look at the learner guide to find something. Good. Yes, and you should have gotten some of this information in emails already. I think this is what you're putting into the chat window here. Good stuff. Good stuff. Thanks, everybody. Good stuff, Dulce. Yeah. So, all right. Yeah. So just in general, if you're having trouble with something, check the emails you first got. Check the learner guide, and lots of good information is there. So the main textbooks we're going to be using, the big one, Fundamentals of Income Tax. This is our primary textbook, 1 chapter per session of the course, as I said. There are also reference materials. So these are not specifically for this course. So this course is for beginners. This is a level 1 course. These other reference materials are for more than one level. So the provincial supplement for British Columbia, we're going to use that. Just bear in mind it's used in all of our courses, not just level 1. So some of the material there is going to be beyond us or not relevant to us. The Tax Academy reference, this is all common federal and Quebec tax forms. And again, many of these will not be relevant to us. They are used in all H&R Block courses. Facts and figures, this is all general tax information, such as tax rates, for example, that is not forms. And this information, again, is used in all H&R Block courses. There is a software textbook purely for level 1 for our software sessions, but those come later in the course, so we will get to that. Now, let's turn our attention to ULearn. Now, ULearn is our education platform. And it looks like this from the landing page here. I just want to show you some of the major points on it. So these top marks here are not clickable themselves. You scroll over and it gives you a drop-down menu, so you can click Welcome to go to the Welcome page. Particularly, I want to point out 2 things. First, your transcript. This shows the course you are taking. When you are looking at these courses, and this is something that we bring up in the learner guide, we're going to mention again and again. When we open the curriculum, you can bring up the learner guide here as well. You can download it. And a sample test. So this just lets you see if the test will run on your software. Do not open assignment 1 or assignment 2 or the theory exam. You can look at the instructions, but don't open them until you are assigned to in class. And the reason is when you open them, a timer starts and you have to complete them. And that timer cannot be reset. So don't open them until the time comes. I have had cases in the class where students have somehow opened them even before the first session of the class, and then it is an immense pain. But do not open them until we tell you to. In the course, they are not imminent or anything like that, but we're going to sound like a broken record, reminding you again and again not to open them. And again, it's because these cannot be reset. And so If you open them, our advice is just try and do it as best you can so you don't get stuck with 0. But better to just not open them at all until you're ready. All right, other things in ULearn. If you look here under Connect, you see an All Communities button, and you're going to want the Tax Academy Community 2025. This is a series of discussion boards and downloadable resources, and in particular, so you would go to the English discussion boards. So the tools and resources for all courses are applicable to us, and the fundamentals of income tax level 1. Now from here, this is where we're going to find virtual session recordings. So tonight's recording is going to be findable in here. If you can go back and watch it in the future. But there's also a fillable forms package. These are all PDFs that you can fill in to do the various assignments, and you can download to your computer here. So you just click on here, and then right-click to do a save this link, and then it'll save to your computer. I have already done so, and this is what it looks like when you click on it. So these are the tax forms that we use in the Level 1 course, and only the Level 1 tax forms. If you click on here, the forms are listed by the form number on the left, and then ones that are specific to an individual province are here in the provincial form. So for example, 5000G is the guide, federal guide. So this has the guide for explaining how you do the tax return. And what's another one here? This is the main tax return itself. This is a generic version used in certain provinces. However, many of the provinces have their own individual tax return designs. So for example, the one for BC is right here. We're going to talk more about this in the second half of the course. What I just want to show you is one thing, a general thing with these forms. So this is an annotation tool I'm using here, just to draw on it. The name of the form is normally at the top of the form. So this is the income tax and benefit return. The designation of the form is the T1 2024. So a T1 is an individual tax return. It is a return for individuals. This is what we are going to cover in this course. There are other kinds of tax returns. Corporations do a tax return called a T2. Trusts and mutual funds do a tax return called a T3. But they are much more complex than this, and we are not going to be doing them in this course. This is a course about doing individual income taxes, so we are going to be looking at the T1. You're going to be becoming very familiar with it. But what I want to show you here is a little bit of records management, form design. For all of these forms, the date is up here, but also the last date the design of the form was updated is noted down here. So this is a T1, but what type of T1 is it is indicated down here. This is a 5010R E for English, and then 24, so this is the 2024 version of the 5010R. And that's important because when you pull these up in the fillable forms package, they are listed by that designation number. So the P1 for British Columbia is in the British Columbia folder, and it's called the 5010R. It is 5010 because British Columbia is the 10th province if you begin at Newfoundland and work your way west. So there's almost always a logic behind these serial numbers and form names, but it's not always obvious and not always important either. This is just helpful when you are working with these more commonly to, if you're familiar with this, it makes it a little easier to navigate this wall of forms and PDFs. Please don't be intimidated by it. It's more for records management and document control purposes. But most of the time, we're just going to be using short forms like referring to the T1 or a T4 and so on. But more about that later. Just wanted to show you the fillable forms package. That's the main thing for now. All right. Now, class schedules. It should be available on uLearn in there. If not, I've emailed it to you. And the generic schedule is in your learner guide. But we want to make sure we're using the correct schedule for this particular session of the class. And again, I can pull that up in a moment. What we want to stress is that your assignments and your due dates are clearly listed in the schedule. They are also referred to multiple times in class presentations. So I had a student last year who complained to me that he was somehow surprised by an assignment and he really felt we should mention it in the class. And I said, well, I feel I did mention it in the class several times, and particularly this class here. And then I looked at my attendance that my moderator had kept, and I said, I can see that you were in the class when we talked about this. And I also sent an email mentioning the assignment, and he said, oh, but I don't always read the emails because you send so many emails, and sometimes when I am signed into the class, I'm not paying too close attention because I have other things to do. And all I could say is, well, I'm not sure what you expect me to do with that information, but in the interest of fairness, I do try to very much stress pay attention to the assignments and the due dates. There are 2 assignments and 1 exam. Do pay attention to the schedule. But again, do not open the assignments until we tell you to, until the appropriate time. Actually, let's just touch on our schedule for a moment. So our schedule, which will be up here, right down the bottom of this list, down here, Tuesday, Thursday. So this version that I've emailed to you, so you should all have this, shows very specifically when our classes are going to fall. And as you can see, roughly speaking, it's 1 chapter per session. Chapter 5 is split across 2 sessions, for example. Some sessions end 1 chapter and begin the next one, and so on. What you'll notice when you look at this closely is that we have a break of around a week around Thanksgiving. That's not just for the holiday. You get a full week off, and that's in order to do the assignment. There's a second break in the course around assignment 2, so you get a chance to do that, and then another week break in the course to do the exam. So there are going to be breaks as we go through. And of course, September 30th is a holiday in BC, so there is no class that day. All right, so when you're looking at a schedule, just make sure it's the schedule for the correct class in case you somehow download the wrong one from uLearn or something like that. And question over here. Yes, so there is homework. That's a good question. We'll talk more about expectations in a couple slides, but there is some homework. A quick answer, Emma, is that all of the self-tests and assignment 1 and assignment 2 are actually in the textbook. You can look at them now if you want. You just can't open them up in uLearn, right? So you can look at the assignments anytime you want. So they shouldn't come as a surprise. But yes, we will be reminding you about everything. Don't worry about that. All right. Okay, let's get back here. Other things about WebEx. The main thing with WebEx to bear in mind, so this is my drop-down menu up here, which gives me various things I can do. There's also various tools we have with it. And I'm going to be showing you one of those tools a little later to enhance interactivity. Mainly what I will tend to do is annotate things. There is an ability for students to annotate things. I tend not to use that very much in my class, except once in a while just for fun, because it can get pretty unfocused if you're not careful. But generally, when we're looking at slides, I'm going to be trying to use this to punch up various information just to keep things visually interesting. The other thing about WebEx, and I think I mentioned this earlier, but just in case anyone came in late, WebEx is a little bit, I don't want to say flaky, but it doesn't always play nice with other things that you've got going on the computer. So if you've got other browsers on, you're trying to play sound in other browsers, then that can interfere with WebEx. So if you're trying to watch some Netflix while listening to me, because you're just not getting enough excitement, have that on a separate machine. If you're trying to run it at the same time as WebEx, it can kind of interfere with it. And sometimes students have troubles with the sound with WebEx, and sometimes WebEx will just mute me for no obvious reason. Finicky, that's a good word, Dean. It's finicky. So I've used it quite a bit, but even now it can still turn on me if I'm not careful. Yeah, so just be aware that's just kind of the nature of the platform. All right. So with all that, oh, it wasn't working on Safari but used Firefox? Oh, yeah, okay. That browsers even today can still be a little tricky. I had to do something a couple years ago where I needed to get a fillable PDF from I forget what it was, the provincial courts. I had to file a legal document, and their browsers would only accept Internet Explorer and an old version of Internet Explorer. So I had to find some ancient version of Internet Explorer just to get this PDF to pull this document that I had to file for probate for an estate. So, you can run into some surprising things sometimes, but yeah, so sometimes just try a different browser and that can help. All right, so the aim of this course then is to, by the end of this course, you should be able to complete most basic personal income tax returns in Canada. So as I mentioned, these are T1 returns. There are T2 returns for corporations, T3s for trusts, and business filings, even for small businesses that are attached to a T1. Those are a bit more advanced than what we're going to be looking at in this course. Generally, at the end of this course, you should be able to handle about 75% of the T1 tax full year resident tax returns out there. So this course gives you a good foundation to build from. So some of you might be concerned, this is an expensive course, am I going to get my money's worth with it? I can assure you, you will more than make your money's worth from this course, just from having a better understanding of how it works, how taxes work, and how there are things you can take advantage of. The analogy I like to use is that it's basically learning how to do car repair. If you understand how your car works, you're going to be able to maintain it much better, spend a lot less on mechanics, and so forth. Now, so when we say basic here, again, I want to stress this course is not intended to be comprehensive. This is an introduction. Some questions may come up in the course, although I do encourage all questions. Some of them I will need to defer on because either we're going to address them later in the course or because they're simply beyond the scope of this course and they would eat up a lot of time that we could otherwise have. But do feel free to send me questions by email if they are beyond the scope of this beginner course. That's perfectly fine. But in general, for class time, we're going to be focusing on things which are in the textbook and thus potentially on the exam. There are a lot of other interesting things we can talk about, but if it's not on the exam, we're not going to be spending too much time on it. We were asking about homework, so let me explain our methodology. The idea with the course, and again, remember our idea is that you'll have the textbook and other materials close at hand on a tablet you can refer to as I'm giving the lecture. The idea is that you read, or at very least skim, each chapter before you come to class, to prime yourself to be ready with some questions, to have a general idea of the topic that we're going to be talking about. In this online session, we do not have enough time to go through every point, every paragraph of each chapter. We simply don't. So we're going to be hitting the main points in each chapter and answering any questions you might have. So a good thing we suggest is to go through your InkDoc and put notes in it in each chapter, and then when something comes up in class, you can expand on it, and then you're just informed going into it. Then in class, we're going to be going over the material again for each chapter, but again in kind of a top-level sort of way, focusing more on some things and less on others. And then thirdly, after each class, I am going to be emailing you the PowerPoint slides from the class, or at very least the standard slides from each class. Occasionally, I might add a slide with some supplemental information or something like that, but that's relatively rare. And some slides are optional as well. So, but the PowerPoint slides we send out after every class, and then you can review them after as well. So the idea is you're going over the material 3 times to get a better handle on it. At the start of each session, we will begin with an agenda, and here we talk about the general topics we're going to talk about today. So today we are going to talk about, for example, the state of Canadian income taxes as they are now. We're going to talk about the concept of income, and then we're going to begin to discuss the main form, which is known as the income tax and benefit return. We're going to talk about the major filing methods of sending that return to the government. We're going to talk about an important document the government then sends back to you called the Notice of Assessment. And then we're going to talk about some important ideas around records and receipts. Now, again, the agenda, these are just very broad descriptions of what we're talking about. More specifically, though, in each chapter, we're going to have learning objectives. So at the conclusion of each chapter, these are the things that you should be able to do. And these learning objectives are specifically listed in the textbook at the beginning and the end. So, for example, from chapter 1, by the end of it, you should be able to determine who is required to file taxes and why some people who may not be required to file taxes should file. You're going to be able to determine what income is subject to tax, and you're going to be able to differentiate between total income, net income, and taxable income, which are 3 terms that you are going to see used a lot when you work with taxes. In classes where we have more than 1 chapter in the class, when we move to a new chapter, we will introduce the new learning objectives at that point. Other objectives for today, though, you're going to be able to explain the due date for taxes and the 3 major methods that you have for filing a tax return. And then you're going to be able to talk about the various online tools provided by the Canada Revenue Agency for individuals and for tax preparers. All right, so let's begin at the beginning, the evolution of the Canadian income tax system. Now, I want to be clear about this. The reason we're talking about this is that to understand why Canadian taxes are the way they are, it's important to understand how they evolved. Income taxes are not arbitrary. Different countries have different systems. And to understand the Canadian system, it's helpful to understand where it came from. So Canada, as you probably know, originally began as a loose association of separate British colonies and 1 large French colony, which was taken over by the British. So in the 19th century, what you had was a patchwork of different taxation regimes. The various colonies merged into Canada at different times and brought their own tax systems with them. And most of the tax revenue came from taxes on goods, imports, exports, that kind of thing. There were few or no taxes on personal income. This led to a very uneven patchwork sort of system. And this was fine-ish until the early 20th century when Canada began to become more of an international player, and in particular wanted to send its army and navy overseas to fight first in World War I, and then in the Second World War and various British conflicts. And that requires a lot of money. So during World War I, the Income War Tax Act was implemented to give the government a chance to have stable funding, reliable funding for this, relatively speaking, very large war effort for a still relatively small country. So income taxes were introduced then, and they were intended as a temporary measure, and people still joke about this, how they were supposed to be temporary, but the fact was they replaced all these older, more inefficient taxes, and governments really liked having this new, reliable source of revenue. Fast forward to World War II, and the system was further refined with the idea that employers would now deduct some money from your paycheck, deduct some tax, and then send it directly to the government. So you never received this money. Instead, it went directly to the government as an installment of what your tax bill for the year was going to be. And employers were made responsible for collecting this. After the war, the Income Tax Act was adopted, and all the temporary wartime measures were accepted as being permanent. And again, they were simply a big improvement on the very inefficient mess of systems that had existed beforehand. In 1962, the various provinces, except for Quebec, came to agreement that they would turn over the administration of the provincial income taxes to the federal government, which is not something that all countries did, as we will discuss a little later on. The only exception was Quebec, but even in the case of Quebec, their system is still very similar to the other provinces. They just handle the administration themselves. A key point to note is that all of the provinces still set their own individual tax rates and individual rules. So provincial tax in British Columbia still has some significant unique features that are different from Alberta, but the same pattern, as we will see, the same pattern is generally followed in all provinces. The key point here is that by the 1960s, all elements of the modern tax system are in place, and then year over year, it's just a question of the system being refined and tinkered with in relatively minor. Hopefully that didn't put you to sleep. Let's see how active you're doing. So let's have some answers in the chat. So first, have you filed a Canadian tax return before? Most of you have, but sometimes there's some students to whom this is completely new. And when I'm talking about taxes with my clients, for clients who are completely new in the country, I talk about it a little differently than I do to people who are have filed taxes for many years. Okay, so almost all of you have. Reza, you haven't filed one before. Sophia, you haven't filed one. Perfect, perfect. Good. So do not worry. I'm going to be explaining things in a very conceptual way, which hopefully will be fairly easy to understand. As a tax professional, it's simply the case that a certain portion of my business, working for H&R Block, is helping people who've never done taxes before. Either they are teenagers who've just got their first job, and as the old joke goes, you don't study how to do taxes in school, so they have no idea how to do it, or they are new in the country, and I need to explain how the Canadian system is different from the system in their own country. So, all of which is by way of saying, if anything is unclear, if you have questions, again, don't be shy. Feel free to chip in with questions. The object here is to help you all get a nice, clear, firm understanding of the system. Now, when you filed, for those of you who did file, how did you file? Did you file it electronically yourself, which would be net file? Did you file it through a tax service such as H&R Block? That would be e-file. Or did you file it on paper? Okay, so I see most of you are filing electronically. Larissa, I see you used to do it on paper. And Lynn, you've done all three. Perfect. So this helps me understand where you're all coming from. A lot of what we're going to talk about in the course will sound like we're only focusing on paper returns. The important thing to understand is that the electronic programs, the software, is all based on the paper return. So you have to understand the paper return in order to better understand what the electronic software is trying to do. Yes, you are having trouble with your name in 2024. Paper filing is still necessary in some cases where there's a technical issue with filing electronically, particularly if the CRA is having trouble dealing with your name. There are certain other kinds of returns which are just technically challenging and have to be filed on paper. The long-term trend is for the CRA to slowly but surely reduce the number of returns which have to be filed on paper. But even today, there are still roughly between 1 and 2 million returns were filed on paper in 2024. So it's still relatively common. But the CRA over the years has been trying to reduce the number of returns that are done on paper. Now, let me ask you all this. On a scale of 1 to 10, and 10 being the highest, how comfortable are you with Canadian income taxes? What is your level of knowledge? Now, some of you are going to be relatively low, but you're not at 0. 8, 7, 7.5. Oh, good. Excellent, excellent. Okay, so we've got a real range of knowledge here. So for those of you who have more experience with taxes and more knowledge, what I want to stress to you, bear in mind if I seem to be spending time on some really basic stuff, remember that I am trying to make it clear for people who are just starting out. If you have a higher level of knowledge, what I encourage you to do is use that knowledge to inform the questions that you ask. This allows you to engage with the material a little more strongly, and you can develop it and ask more sophisticated questions as a result. And this will help improve the overall atmosphere of the class. A real useful skill in a class like this is if there's something where the instructor is trying to explain something it's not quite coming across, if you ask the right question, it will help the instructor maybe get the concept across more clearly. And if you are confused by something and you feel you don't understand, you're probably not the only one. So again, I always encourage you guys to ask questions. And if you know more about the material, this just means you're going to be able to ask better questions. Now, there is a fourth method of filing returns, which we'll talk about a little later on tonight, but it's relatively new and it's not being used very much, but we will touch on it later. So if anyone of you have heard of that, don't worry, we will be getting to that. All right. So the four main concepts we're going to begin with income taxes today. There are four features of the Canadian system which set it apart from other countries' tax systems. And they are the concepts of residence, concept of self-assessment, there's the idea of a progressive tax system, and our provincial tax system. We're going to look at each of these elements in turn. These are the four key things to understand if you want to look at the Canadian system versus other countries' tax systems. So, first of all is residence. Now, this is where Canadian taxes are different from the United States. Canada bases the necessity of filing taxes on your residency, not on your citizenship. Your residency, although the language might sound like it's an immigration concept, it's not. It is simply the everyday meaning of the term. Where do you live? Your living situation. Do you live in Canada? Do you work in Canada? Were you living in Canada all year long? Were you working in Canada all year long? Then you are a resident for Canadian tax purposes. Now, obviously, this can get complicated. Maybe you only lived in Canada part of the year, or maybe you have a home in Canada and a home in another country. Maybe you work in Canada and in another country. So that can get complicated, and we need to do determinations around that. But basically, it boils down to where you live, where your family lives, where your job is, things like that. Concrete things. As the CRA says, it is based on questions of fact. And your immigration status does not actually play into it, and neither does your citizenship. If I'm a Canadian citizen, but I live in Japan, work in Japan, make money in Japan, then I'm not resident for tax purposes. And residency is based on your living situation as of the end of the year. So if I move to Canada on December 31st, I will be resident for tax purposes, but only for that one day, for example. Because the provinces have different tax rates, different tax credits, and things like that, we also need to determine someone's province of residence using similar criteria. So again, someone might live in British Columbia but work in Alberta. I sometimes see this with airline staff. Say they may live in Vancouver, but the company is headquartered in Alberta and they are paid out of Alberta, and things like that. So there we need to use similar criteria. Where do you live? Where are your bank accounts? Where is your driver's license from? And so on. And that affects the rate of tax you're going to pay. The third characteristic is what we call self-assessment. Click. There we go, self-assessment. This is where the Canadian system, the North American systems generally, differ from European systems or other systems in a lot of other countries. Under the self-assessment system, you are required to determine your own tax liability. Philosophically, the reason for this is this. No one knows how much money you made in a year until the year is finished. No one can, right? Until December 31st, 2025, you don't know exactly how much money you made in 2025. You might get a lot of money on the last day, or not. You don't know. So what happens after the calendar year, so the accounting year is the calendar year, but after the calendar year, January, February, March, April, you have a period of time where you essentially conduct an accounting process, a reconciliation process, and you actually add up all your various sorts of income to determine your taxable income, and then determine how much tax you have to pay on that income, and then you compare that number with the amount that's already been deducted and sent to the government, either through your employer or directly. And these calculations are made using one large form, which is called the income tax and benefit return, which is then sent or returned to the government. Again, think of it as an accounting process, a reconciliation process. It is the taxpayer's responsibility to make sure the return is complete and accurate. And we're going to be looking at that form later on, and particularly in our next session. But for now, just keep in mind, it's all based around one big, important form. Now, there are advantages to this system, and I often have to explain this to new Canadians, because these may not be obvious if you're used to another system. The big advantages of this system, first of all, it saves the government time and money. Taxpayers always complain they have to pay for the government to do all these things. Well, when it comes to taxes, you are doing a lot of this work for the government. The government doesn't have to employ clerks to tally up all your income and calculate all your taxes and your credits. Their administrative costs are much lower doing it this way because they don't have to track all your various jobs and income throughout the year, and then you just report it all at the end. The other advantage of the system is that it protects your privacy and allows you to have much more control and discretion over what you claim and report. And you can really see why this would be appealing in a country like the U.S., which values individual freedom so much. So You only report to the government what you want to report, and you do not report to the government anything that is not specifically asked for and it isn't their business. So these are the two big advantages of this system. Now, can you think of some disadvantages of this system? So the big advantages are it puts a lot of power in your hands, gives you a lot of discretion, and allows you to make choices for things, and it takes a lot of the burden off of the government on keeping track of everything. But there are disadvantages to the system. Can you think of any? Yeah, that's a good one, Leanne. There's the possibility of mistakes, inaccuracies, underreporting your income. That can happen. Lying is a weakness in any system, but yes, that's true. A lack of knowledge, uninformed individuals might make mistakes, and it can be complex. Good, good. Indeed, you're getting it. The problem with this system is that it assumes too much. It assumes that the individual has an ability to fill out the forms, to understand the system, take advantage of things which they might not otherwise do. And this gap is where tax preparation services like H&R Block come in. So the gap used to be much wider before the advent of computers. Back in the 60s and 70s, there weren't computer programs for people to do their own taxes. They would have to come see specialists like H&R Block if they found taxes too confusing. So a lot of our business model then is on helping people bridge this gap. Now, over time, computer software has gotten more sophisticated, and the government, bless them, has been trying to simplify things from their end. So many people can do their taxes today. And in fact, I firmly believe most people could do their taxes today, but it's just simply faster and more efficient to see a service often. And often people can handle a simple situation okay, but what happens in a year when something complex has happened or something strange has happened? That's when the value of a service like H&R Block really comes into play. If something strange is going on, it's good to come and see us. We have the experience to deal with it. The object of this course, though, is to give you this knowledge, to help you understand what to look for, help you understand how to keep on top of things. And if you're so inclined, you can apply to work with us if you do well in the course. But that's where we come in, to bridge this gap, which results from a self-assessment system. There's just this assumption of knowledge, and even though, as we will see, there is a logic to the tax system, it's not as complicated as people might think, but some people simply have trouble with complex paperwork anyway, no matter how simplified or streamlined it is. So it's good to have some backup when you are getting into things. All right, and let's see, any other points that you raised here? Right, now we're going to be talking about income in some detail going on and how we track it and various tools we use to keep track of it as we go. So there are tools we can use, but this course will also give you a better understanding of what tools there are and how to use those. Okay, now one other point about the Canadian tax system is that it is a progressive tax system, and this again differs from some countries. For anyone who's unfamiliar with the term, this means the government imposes lower rates of tax on lower levels of income and progressively higher rates of tax as the level of the income increases. Federally, there are currently 5 levels of tax, known as tax brackets. Let me show you a diagram. Yes, tax avoidance is a problem, but that's a problem in any system. what we want to stamp out is accidental tax avoidance. So it's true the more you earn, the higher the tax, but in a very specific way. So when we look at this diagram here, I also like the analogy of a layer cake. This is how it currently works. So your first $55,867, you're taxed at 15% federally. Now, this doesn't mean you're going to pay 15% federally, as we see, but stick with me here. We'll get into that a little more later. But from a basic tax rate, your first 55,800 or so taxed at 15%. The next 55,000 or so is taxed at 20.5%. Now, the important thing is, it is not 20.5% plus 15%. It is only 20.5%, and it is only on the money above 55,867. The next 60,000 or so is taxed at 26%. The next 70,000 or so at 29%, and then anything above that is taxed at 33%. It doesn't matter how much you make. You can make $1 billion a year. It's never going to be higher than 33%. Now, sometimes politicians try to distort this or fearmonger about this, and you say, if I make $500,000, I have to pay 33% on all of it. It's like, no. You only pay 3% starting over 246,752. So if you make 246,753, only $1 will be taxed at 33%. The next 70,000 is only taxed at 29. The next 60,000 only at 26. The next 55 at 20.5, and your first 55,800 at 15. Right. So people will often try to distort this. And you'll hear people say, it's not even worth it. There's a point where I make money and I have to pay it all back to the government. It's like, no, you really don't. You're just paying an additional 4 cents on the dollar. I do sometimes have people coming in who who have never paid income taxes before for one reason or another, and then they are kind of shocked by it. But yeah, if you understand the idea is you're going to pay something, and if you are earning money at a higher level, the rate of tax is going to be higher because less of your money is going to pay basic things like food and shelter. Onyema, that's an excellent question. What are the factors that determine this base amount of 55,000? Well, the base amount is indexed for inflation. So these brackets go up every year. Remind me in our next session when we go back and look at some T1 forms from earlier years. I can show you how the brackets have changed a little bit over time. But every year these brackets get wider and they get higher because they are indexed for inflation. These were probably originally set as a round number, and then over time, every year inflation, because inflation is never a round number, it's usually 1.83% or 4.2% or something like that. So that's why you get these brackets with these odd and hard to remember numbers in them. So that's a good question. Normally, the brackets are increased from the beginning of the year. The government will set those rates. Tax rates, as opposed to the brackets, the tax rates can change during the year. And in fact, there is a change happening this year in 2025. We're not going to be talking about it in this course very much because 2025 isn't finished yet. So the government could still conceivably make changes. So in this course, we're going to be talking about the tax year 2024 because it is a finished year. There are no more changes for 2024. It is fixed, so it's easier to talk about. But yeah, one thing to bear in mind, governments can change this in the middle of the year if they really want to. Sumit, we don't use the term waivers, but yes, there is something like that. We are going to talk about that. But yeah, it doesn't mean if someone is earning $25,000 that they are actually going to pay that 15%. So there is something else in play, but we're just beginning with the basic concept here, right? But yeah, it's not called a waiver, it's called a tax credit. But we're going to talk about that more. We're not going to talk about that so much today. We're going to get to that. We're going to get to it. Don't worry. All right. But the main concept here is that the more money you make, the higher the tax rate on your higher levels of income, because once you're making $246,000 a year, less of that is going to be needed just to have food and clothing and shelter, and more of it's going to be luxuries. So you can afford that extra 4 cents on the dollar more than someone who is only making $20,000 a year. So if you are all paying attention, you should be able to answer this poll question relatively straightforwardly. Now, polling is a feature that we use in WebEx as a means of helping me understand how well people have understood something, and also helping you stay awake. So the question is, a taxpayer with $70,000 in income, they're in the second tax bracket and they pay 20.5% federal tax on all $70,000. So instead of you all having to put answers in the chat, I applaud your initiative, but don't worry, we're going to open this poll question. Polls are another method we use to help you stay engaged in the class, and also help me get a snapshot of how well people understand. As I say, if you were paying attention, this isn't going to be too hard. So we let the poll run for about a minute. Another 30 seconds. Oh, you've all answered, I think. Oh, no, some people, it's not adding up. That's interesting. Oh, okay. So a few people, 6 people haven't answered yet. We'll give them another 15 seconds. At any given time, probably some people are away from keyboard or having to deal with something, so that's fine. So let's close the poll there. All right, so almost all of you got it right. The answer is false, as we just said. So the 20.5% is not on the entire 70,000. It is, in fact, on that first 55,867 is only 15%. It's only the amount above 55,867 that is taxed on 20.5%. So again, if someone has $55,868, $1 will be taxed at 20.5%. That's all. All right, so let's close the polling. So now taxes, that seems very simple and straightforward. But what does complicate it a little bit is that although the provinces and territories follow the federal pattern, they can set their own tax rates and tax brackets. So someone living in BC and someone living in Alberta and someone living in Newfoundland, even if they all have the same income, they might pay the same federal tax, but their provincial tax is going to vary. Although they still use the same basic calculation pattern and concepts, and currently all of them still use the progressive tax system. Alberta, through the years, has flirted with a flat tax system, and a flat tax system is just where everyone has the same tax rates no matter how much money you make, but even Alberta has gone to a slightly progressive system now. To keep things simple, though, as we saw, since the 1960s, federal taxes and provincial taxes are calculated and submitted on the same tax return. We will talk more about provincial taxes in session 5. The one exception is Quebec, which has a separate provincial return. But even in Quebec, they use the same basic calculation pattern as the federal government. They just add a couple of extra components to the calculation, that's all. So they begin with the same model and then just add a couple of things to it. The For all other provinces, the CRA collects and administers the income tax and handles all the administration sides of things, and then just gives out money to the provinces. Again, it's all very efficient. Now, it's important to stress that this is different from the situation in some other countries. In particular, it's very different from what happens in the United States. In the United States, there is no uniformity amongst the states when it comes to income taxes. Last I checked, roughly 1/3 of the states follow the federal model. 1/3 of them do something weird, some individual variation on the model, and 1/3 of them have no income tax at all. They're using that old 19th century model of taxation. In addition, about 1/3 of the states not only have state income tax, but also have tax at lower levels of government. So some states have a city income tax. Some states have a region income tax, and Pennsylvania also has school district and county income tax. Pennsylvania is a real mess. So there's a real value to having a standardized system across the country. And again, this is something which is different in Canada from other countries, particularly the U.S. We are going to be spending some time on British Columbia. This recording session, by the way, is intended for viewers in British Columbia. If you go on to ULearn, if you're outside British Columbia, there are sessions in other provinces that have been recorded. So when we get to the provincial component of the components of the course, we're going to be looking at the British Columbia specifics rather than other provinces. All right. Now let's take a knowledge break here. So a knowledge break is something we have in the course to, it's similar to a poll question, but just let you think about some of the concepts we have. So yeah, let's see how well you've absorbed this idea. So Jack and Jill, our old friends, they are married. Now consider two different scenarios. First one, Jack and Jill each have individual taxable incomes of $50,000. In scenario two, Jack has no income and Jill has taxable income of $100,000. Now, true or false? The combined taxes in scenario one would be the same as in scenario two. What do you think? And again, with these sorts of in-class questions, don't be shy about taking a guess. This isn't for marks. So if you're ever not sure, just feel free to take a shot at it. But I see the overwhelming consensus that this is false, although some of you seem a little hesitant about it. But that's right, it is false. Under Canada's self-reporting system, you are only reporting your own income, and you're only paying tax on your own income. So, as you can see, and don't worry, after this we're going to take a break. So under this system, if both of them have $50,000 in income, they're each going to be assessed tax at 15% of $50,000. One person making $100,000, they would pay 15% on the first $5,867, and then 20.5% on the remainder. Again, unlike some other countries, there is no concept of a combined tax return in Canada. You are always taxed on your individual taxes. Now, there are some purposes for which your income is combined with your spouse, particularly for eligibility for certain credits like the GST rebate or claiming medical expenses or Canada Child Benefit. But for tax and tax alone, you are only taxed on your income. So this is quite an important concept, particularly when we talk about investments later in the course. Your income is in a silo and you're only taxed on it. This also means that one member of a couple can file tax at a different time than their spouse. Their spouse may not file tax at all, or they may file tax years later. That can happen under this system. You are individually responsible for your income and the tax on your income. You can share certain credits and benefits with your spouse, however, but the income itself, you're only taxed on your own individual income level. That is a very good question, Dean, and the answer is yes. But the examples are very limited, and we'll deal with them specifically. And it's only for pension. There's 2 cases of pension, and another case. But we will deal with those individual examples, and they'll be very clear when we come to them. So, yeah. But in general, unless it's one of these specified things where you can move the income from one person to another, you are paying tax on your own individual income. All right, good stuff, everyone. Lots of good questions. I feel like everyone's feeling pretty engaged here. Why is the rate differential for the different brackets not constant? Onyema. So I think what you're asking, is why does the tax rate not go up by a set amount? So why doesn't it go up by 4% each time? So for example, the gap from the first bracket to the second bracket is 5.5%, then it is 5.5%, then it's only 3%, then it's 4%. The short answer, I think, because it doesn't have anything to do with the individual provinces, because the provinces all do their own individual thing. These rates are set by the government, and they have the ability to tweak each of these rates over time, depending on what they feel their needs are. In practice, I think a lot of it has to do with politics. In particular, the second bracket and the first bracket have been reduced a couple of times in the last 15 years. So there was a brief period where this was 15.5. There was a brief period where this was 21. And I think in halfway through 2025, the 15% is going down to 14%. So often when the government wants to lower taxes, they will tinker with these rates. Similarly, the 33% tax bracket was added a few years ago. Before that, we only had 4 federal tax brackets. So governments can move these around, and sometimes the needs are economic. The government needs a little more revenue. Sometimes the government wants to give some people some tax relief, things like that. So, but fundamentally, the gaps are arbitrary. There's no reason the gap should be 5% each time. I think the general pattern here is that at the lower levels, you have this wider differential. So going up a tax bracket makes more difference. And then when you get into the higher brackets, it's only 3 or 4%. So it's less of a differential because it's already so high. I suspect so, Reza. The government doesn't necessarily give us a detailed economic analysis of why they're doing things. Presumably, they're doing this in combination with good advice from serious economists for the effect on the economy. But that, of course, is a different field entirely. Well, all governments want to stay in power. Some of them just we're not going to talk about politics in this course, but it is very clear that different governments have different approaches to tax policy. We are more interested. No, it's okay. I just have to be careful what I say. It's all. But it's very clear from doing this job for a while that different governments have different approaches to tax policy, different philosophies around tax policy, and we all have opinions on what we think is more or less effective for things. But that does start to stray from our mandate, which is to understand the system as it exists today. What I can do is explain, as best I can, some of the logic behind some of the things in the system as it exists today. All right, all good questions, but for now, I think it's time we have a break. So in every, so I'm going to stop sharing for the length of the break. So during the break, typically 15 minutes, and so now it's around 7:30, so I will put it into the chat that we will break until 7:45. Ali Reza, can you pause the recording? There we go. I see the red dot, so we are recording. Thanks, Ali Reza. All right, let's get back into it. All right, so when we talk about filing Canadian income tax under the system, not everyone has to file tax. That's the first thing which can be unusual for, that's one thing which can be unusual for people who are used to other systems. In Canada, you may not be required to file tax, but often there are reasons where you have to. So let's think about this for a minute. So students in the chat, just to help everyone get re-engaged here, what are some common reasons to file a tax return? Someone comes up to you and says, do I have to file taxes? Why should I file taxes? And let's assume they're not fundamental duty. Well, yes. Iona, GST. So by filing taxes, you get back your GST rebate. Good. To claim credits, yes. And some get a tax refund. Some get credits. Hopefully get a refund. To ensure you don't owe, that's a very good reason. To have access to social services, yeah, that could be a big one. A lot of things, in order to access them, you have to have filed tax so the government has an idea what your income is. Benefits such as child benefits, Canada Workers Benefits, good. Yes, to apply for a loan or a mortgage. Often the bank, if you want to get a loan or buy a house, the bank wants some proof that you have steady income, so they want to see your tax returns. Right, these are all good reasons. So some of the big four to file would be if you have tax owing, for example. If you owe tax to the government, you must file. Now, if the government owes you tax, then you don't have to file. You will, however, pay penalty if you owe tax. Now, sometimes it can be hard to tell if you owe tax, so you need to kind of go through the tax return in order to determine whether you owe tax or not. In general, the government doesn't force people to file taxes right away unless they suspect you owe tax, in which case they can serve you with a legal document called a demand to file. But for many people, it can just be unclear whether they owe tax or not. Now, for me, I've been doing tax a long time, and I can often look at someone's situation and say, oh, yes, you're definitely going to be getting money back, or, oh, no, you're definitely going to be owing tax. But even for me, sometimes there's nothing to do but just plug in all the numbers and work through the calculation and see, okay, how are you going to come up? Just as a general point of knowledge, from the government point of view, they want you to get to the end of the year not owing them anything and them not owing you anything. That's the ideal from the government point of view. They want to avoid situations where they're paying you really large refunds year over year over year, and they want to avoid situations where you have to owe them thousands of dollars at tax time year over year over year. And as we'll see through the course, this has various implications for various policies. But what the government wants is for everyone to get to the end of the year having paid the more or less correct amount of tax. As a practical matter under our system, That's very hard to do for reasons which we're going to see. Now, a taxpayer is someone who pays tax, but hang on to that thought, Reza. It's a good thought, because the tax book looks at this in a little bit more detail. Now, if the government owes you money, if you want to claim a refund, they're not going to chase you to make you file the taxes. You have to file the tax, but they're not going to send you that money until you file the tax, because for one thing, they don't know exactly how much they owe you. In general, if the government owes you money, they're not going to send it unless you take action. And also to receive government credits like the GST or Canada Child Benefit, these are based on what your income is. And again, the government does not know what your income is until you file a tax return. And the last point, the last big point here, is disposition of capital property. So a capital property, for anyone who doesn't know the term, this is an asset like a house or a big investment, or exotic things like a yacht or artwork. Anything you sell like that needs to be reported to the government, particularly if it is sold at a profit. So we're not going to be dealing too much with that in this course, other than some basic investment type things. But yes, this is another reason to file taxes. Now, one concept we want to keep clear is that there's a distinction here between taxpayers who must file or taxpayers who, if they want a credit or a refund, they have to file, right? In general, if the government owes you money, you don't have to file. The government is happy for you to not file, and then they don't have to pay you the money. Or more charitably, they don't want to spend their resources focusing on that. They want to focus on people who must file. Now, if we look at the textbook, there's more detail about this. So, yes, I have it open here. So, you were asking about what makes a taxpayer, Reza. So, this is actually defined in the Income Tax Act. A taxpayer is any person, whether or not liable to pay tax, but for tax purposes, a person here is defined as also any corporation, any entity, and any heirs, executors, people of an inherent estate, administrators, legal representatives of a person, and according to the law. Now, that's all a little dense, so we kind of boil it down here. So human beings, corporations, and trusts can all be taxpayers. So when we refer to a taxpayer, it could be either an individual or an entity, like a corporation or a trust. And again, in this course, we are only looking at the taxation of individuals on the T1 return. And if you look in the textbook, there are actually quite a lot of reasons for someone to have to file a return, many more than we have on the slide. You can go through these in detail. So these are all reasons where someone has to file a return. And then even above and beyond that, a taxpayer can sometimes still benefit from filing a tax return. So someone in the last class asked a very perceptive question. What about someone who has no income? Maybe they don't want to collect benefits. Maybe they don't have to file a return. And, even for people like that, there may be a benefit. So, for example, if you want to collect old age security in Canada when you turn 65, it's necessary for you it's based on the number of years you've been a resident in Canada. So by filing tax in Canada, you establish that you were a resident. So even if your income was zero, in order to get that old age security money, you need to file tax a certain minimum number of years in order to qualify for it. So some of the reasons to file tax may not be obvious. All right, continuing on. Now, again, a point I want to point out here, again, the textbook has much more detail about anything we touch on in class than we're able to touch on in class. So if you're interested in these questions, feel free to just dig into the textbook, because often it can go into more detail than I have here. For example, it's got a long section on due dates for tax returns, but we're just going to summarize that. So, So the big thing to keep in mind, as I said before, the taxation year in Canada is the accounting year is based on the calendar year, January 1st to December 31st, with a few exceptions in special cases, which we will get to. The due date for the taxes is April 30th. Again, the idea is the year ends December 31st. You have a few months to gather your information and for your bank and your employer and your school to send you information, and then you are expected to file by April 30th. Two major exceptions here. If you are self-employed, running a small business, non-incorporated business, you and your spouse, for you, your tax returns are due June 15th. But although the tax return is due June 15th, any balance that's owing is due April 30th and will start accruing interest as of May 1st. So if you are running a small business and you think you owe tax, you should pay the tax by April 30th, even if you work out the fine details during the summer. The other note here, and this applies to any tax deadline, if it falls on a weekend, then the tax return is going to be due on the immediate Monday. So for example, if April 30th falls on Sunday, then the tax due date will be May 1st, which is the Monday. If April 30th falls on a Saturday, the due date will be May 2nd, which is the Monday. One other thing I want to mention here, although it isn't going to apply in most years, the CRA does have the ability to extend the tax deadline in an emergency. The big example which happened recently was during COVID, the government extended the tax deadline by a month. That is extremely unusual. More often, you'll get a situation where the CRA has some kind of computer issue, the CRA systems go down for 3 days, and so they will extend the tax deadline by 3 days. But ever since COVID, I've noticed the CRA seems more reluctant to do that, and instead will make some special exemptions for people in given categories. So in general, they will not extend the tax deadline unless they really need to. That said, I've seen it happen 3 times in 17 years, so it's not unheard of, but it is a little unusual unless something major happens. Question I see, if you are working as an employee and self-employed, which due date applies? The self-employed trumps it in that case. If it's a statutory holiday, the due date will be the first upcoming working day. Yes, but there is currently no statutory holiday which is going to fall around the end of April. Easter does not fall that late. And for June 15th, there shouldn't be. But if there were a statutory holiday, it would be the next working day for other tax deadlines. All right. RSP contributions. You're Jinlin, don't worry. We are going to talk about RSP contributions, but that is not until a much later session of the course. Right now, we're still dealing with very basic stuff. But you're right. RSP contributions are their own thing. So we will talk about that later. Don't you worry. Are there instances where an individual can apply for an extension? It's more like a waiver in a case like that. We will talk more about that towards the end of the course. A key thing to keep in mind, I'll mention at this point, if you don't owe tax, if you're getting a refund, then there is no penalty for filing late. So the due date is very important for penalties if you owe tax, but if you don't owe tax, then the penalty is based on owing 0 tax, and 15% of 0 is 0, so there is no penalty for filing late. So in many cases, an extension isn't necessary. It just means that your refund is going to be delayed. Alexandra, a good question. We will get into that. There is interest that is charged, and there is a penalty depending on the circumstances. We will talk more about that later in the course, but how those are assessed. But just to give you the quick version, if you owe tax and you don't pay by May 1st, then that balance will start to accrue interest. But if you don't file tax by April 30th, then if you owe tax, when you do file, you will also be assessed an additional penalty because you filed late. So even if you owe tax, and even if the tax isn't exactly right, I often suggest that people file by April 30th to avoid the late filing penalty, and then they can adjust it later and deal with things after that time. All right, but we will talk more about that a little later in the course. All right, now, question. If you're in Canada for 10 years, never filed, can you go all the way back for those years, even if no income is made? The answer is yes, Steve. We will talk more about that later, but yes, you can file for up to 10 years. But we are going to talk more about that later. Don't you worry. Don't you worry. And if you do not file tax, how could you know the balance owing? Essentially, you would have to estimate. But again, this is where people like H&R Block come in to help people estimate. All right, so let's test your general knowledge with another poll question. So, let me pull it up here. So, true or false? All income is potentially taxable and must be reported on your tax return. All right. Let's see what you think. I'll give you a few more seconds here. Okay. Some people are still thinking. I'll give you a few more seconds here. Not too much. All right. So some people still not sure, and some people didn't answer. Perhaps they're not back from the break yet. That's okay. All right. So let's. But I can see that there's a real division here. So let's let some people still have the answer outstanding. So WebEx makes me wait a few seconds in case someone's going to push the button late. Okay, so something of a division here, and some people are not sure. So the answer here is true. All income is potentially taxable and must be reported on your tax return. That is true, but Dean, you are correct. It depends on the definition of income. So let's, again, go back to the textbook for a moment, because we need to understand what they mean by income. So what is income? So there's a section in the textbook I'd like you to have a look at here, and in particularly amounts that are not included in income. So these 4 points are in the slideshow. Let me pull up that slideshow for a moment. Right. So there are 4 main categories that are singled out. So income from an office or employment, income from a business or property, capital gains, and then other specified sources of income. Now, the important concept I want you to absorb here is that not all money you receive is considered income. And not all income you receive is money. So that's why we have these very specific definitions. So Income that is not money, for example, these are things like a taxable benefit at work. So H&R Block, for example, pays my health benefits. If they paid my health benefits, or if they paid for my parking, that might be considered a taxable benefit and be included on my T4. So it's not money. I cannot use that to pay my bills, but it is still considered income and reported on the tax return as income. But there are things which money we receive which is not reported on the tax return. Now, sometimes people wonder about an office or employment. An employment is just a regular job. An office, here, think of an elected office. So these are positions like, say, being an MLA, being the Prime Minister of Canada, being the mayor of Richmond. These are all offices where it's not a job in the regular sense. You don't have a boss in the regular sense. You may have work hours, you may get a regular salary, but you don't own the company, but you also are not an employee of anybody except in a kind of diffuse sense. That's what we mean by an office. Income from a business or property. So business, fairly straightforward. You own the business or you're a shareholder in a company. Property, you have investments, which is giving you money, that sort of thing. Capital gains, again, this is when we sell an asset, a capital property, and we make money from it. That is considered income, which is subject to tax. It has special rules. We will talk about that later in the course. And then other sources of income as specified in the Income Tax Act. Now, what I would like you to do now, looking at the textbook, I want you to put some answers into the chat. Have a look at the textbook now. And just tell me, what are some amounts that are not considered income for tax purposes? Some of these I think you can probably guess. Some of them might be unfamiliar to you. But name some amounts from the textbook. See what you can find. And again, this is right under the income subject to tax part in the textbooks. Just read further down the page and you'll find this. So inheritances, good. Lottery winnings, gifts. RRSP, a special case. I'll come back to that. An allowance from your mom. Yeah, that would be a kind of gift thing. Very good. So gambling is an interesting and special case. If you win the lottery, that is not taxable. It's assumed to be an act of chance. If you walk into the River Rock Casino and win $5,000 in roulette, again, you're just assumed to be lucky. You're not taxed on that. If, however, you are professional poker player, let's say, and you make a living playing poker, you travel around the world, you go to poker tournaments, you make money, well, that is considered business income. You would also have very high expenses to deduct against that. But if you're a professional and you make your living gambling, then that's business income. Good question, Julie. Let me come back to that. There was something else I saw here I wanted to touch on. So gifts are not considered income, but sometimes the question is it really a gift or not? And there's an entire income tax pamphlet on that to determine whether it is a gift. So if my mom gives me a gift, that's pretty straightforward. And it's not the amount necessarily, it's the nature of it. Right? If it's a gift freely given with no expectation, then it wouldn't be considered income. Inheritances, again, not taxable in Canada. Any money you receive from an inheritance, the estate has already paid the tax, if any, or the probate fees. Scholarships are a special case we'll talk about later in the class. Sometimes they are not considered income, sometimes they are. RRSP payments are considered income when you withdraw the money from the RRSP. Child tax benefits and GST benefits are not considered income because they are more in the nature of a tax refund. Child assistance payments, again, these are reported on the tax return, but they are not included in income. And anything else? So the key concept here, good, we're identifying some good things. Insurance benefits, it depends on the nature of the benefit. So if, for example, I'm injured in an accident and I'm receiving an insurance payout, that is compensation for damages. That's not normally considered income. If it's more like life insurance, where I'm getting essentially a return on an investment, then that would be considered income. So it really kind of depends on the nature of it. Here's the key thing. So if it's reported, if it has to be reported on a tax return, then it's considered income. Not all income is taxable, but if it is income, it usually has to be reported in some way. Some things you receive are just not considered income. And some things like scholarships are sometimes considered income and sometimes not. But that's the key concept. If it's income, it needs to be reported on the return. Whether it's taxable or not is a different question. So, the income tax and benefit return is the form we use to figure out what your taxable income is. And this is done in stages. So, when we work through the income tax and benefit return, you can think of it, and I'm going to show you it at a top level in a few slides here, as one long flow chart, one very long equation. And in the first stages of it, we calculate 3 income figures, and each is a subtotal of your income for the year. Question. So normally the tax law, Reza, that's a good question. Normally tax law specifies whether something is income or not. If it is not specifically mentioned in the law, then it is not income. So for example, strike pay, it's not mentioned as income, therefore it does not have to be reported. Jury duty fees, however, are mentioned, so they have to be reported, and so on. So it usually comes down to, does the law specifically mention it or not, or what is, and sometimes you have to figure out what is the nature of this payment. Is it more like business income, or is it more like a gift? And occasionally I see some strange things I have to figure out. We are going to talk about all the various sorts of income throughout the course, not to worry about it. All right. But on the tax return, our first steps are to figure out how much of it is taxable. So we total up all of our income, and we do it in 3 stages. First, we figure out total income. Then we figure out what we call net income, which is used for certain social benefits calculation. And lastly, we figure out taxable income. What is the amount of your income that you have to pay tax on? So the first one we deal with is total income. And this is very simple, very straightforward. It is the sum of all your reportable income. And again, if it is not reportable on the tax return, conceptually you could say, oh, it's not income, right? It may be money, you may have gotten it, but if it's not on the tax return, it's not income. This is calculated in step 2, and this is all added together. Step 1 in the tax return is identification and other information, more or less all for internal CRA purposes, and there's no calculations involved. I'm going to show you each of these steps a little later on. So total income is totaled up line by line by line, and the subtotal at the bottom of page 3 is on line 15000. And that's your total income. It's a very straightforward figure. It's kind of a top-level financial health figure. It's not really used directly for very much. Step 3 of the tax return is where we figure out net income. So with net income, we begin with the total income figure, and then we subtract various deductions. That is, we deduct them. These are all specified in the Income Tax Act, what you can deduct. You can't just deduct any old thing. And then what is left is on line 23600, and that is your net income. Net income is used to calculate eligibility for many income-tested credits and benefits, like the Canada Child Benefit, the GST rebate, things like that. Also qualify for various social programs and things like that. Net income, obviously, because of the deductions, can only be, it can be the same as total income, or it can be smaller. It's never going to be higher. At no stage are we adding any additional income in. All of the income is already be added in the total income stage. And you have a question. If you get a bonus from employment, is that taxable? If it's included on the T4, then normally it is taxable. Sometimes from your employer, you may receive a small gift or another bonus, like if they give you a turkey at Christmas or something, which would not be considered taxable. But normally bonuses are taxable. And the test would be, is it included on your T4? Is it included in your taxable income figure that the employer prepares? All right, your taxable income then is the final stage of this portion, where you take your net income from line 23600 and then again deduct certain allowable things per the Income Tax Act, and then this is calculated in step 4 of the tax return. And the final subtotal is on line 26000 on page 5 of the tax return. So taxable income then is the income that your tax is levied on based on the tax brackets we already saw. So if, for example, you have $200,000 in income, but you have $100,000 in deductions, you're only going to be taxed on those $100,000. So deductions are very important because they can push your taxable income number down into a lower tax bracket. All right. Oh, and a question. Sophia, you are asking, what if you had a vehicle which got destroyed and then you got paid out by the ICBC at a market value which is higher than the original price value? That would be very unusual. Technically, that would be a capital gain. In most cases, however, vehicles depreciate, and so it's a capital loss, and so it doesn't need to be reported. It would be very unusual for the compensation to be higher than the original price purchase, but things like inflation can happen. But in a case like that, it's analogous. It's basically the same as if you sold the car, right? If you sold the car for more than you originally paid for it, that's a capital gain. So that would be income. It would be unusual, but that would be it. Often when we do taxes for people, we have to look at cases like this and apply our logic and say, okay, what makes sense here, right? So these kinds of questions are kind of the heart of what I do as a tax professional. People bring me unusual things. I say, let me think about that. How would we treat that? How would we handle that? All right. Yes. And Rachel had a question. Net income, can total income can be considered gross income? Gross income is a specific term which is used in a different way on the tax return. So you can consider total income as analogous to gross income, but gross income is used in the tax return specifically when we're talking about things like business income and rental income and so on. So total income has a very specific meaning in the tax return. So I like to avoid referring to it as gross income. You can think of it in that way, but generally, but just remember, total income has this very specific meaning in taxes. If your net income is your total income minus deductions, why is it not the same as your taxable income? Why is there a second round of deductions? Now, that's an excellent question, Alexandra. To illustrate, I think, when we look at the form itself, I think that should become more clear. Are we ready to Let me see how far along that. Yes, I have one other knowledge break before we get to showing you the form, at least a little bit. But hang on to that thought, Alex. So let's see how much you guys know. How many pages is the current income tax and benefit return? And if you don't know, just take a guess.